next question, moving on, where are you seeing the most exciting opportunities and what risks might lie ahead? Now, I'm conscious we've already talked quite a lot about risks in that last question, but I do think we want to also talk about the opportunities. I'm going to ask that question to Richard.
Yeah, look, I mean, we tend to invest not on a particular technology that we want to, promote all over the world, or a particular market. It's all about diversification in the GSCO portfolio. We offer investors diversification, both in terms of geographic diversity and also in terms of diversification of technology. The reason for this is, of course, in terms of making an impact, a positive, sustainable energy impact, it is a global phenomenon, the transition to net zero. So in order to make a meaningful impact, you have to look at the problem in a global perspective and invest globally as well. And that's really the underpinning of our strategy. Secondly, it offers investors also a risk management tool to have such a diversified way of looking at things. Now, that said, in order to look at a particular opportunity, if it's not rooted in a particular technology, what we look for is what is the structural demand gap in that particular market? What is in that energy market that is missing, such that if we invest in supplying that, then we get a differentiated return for our shareholders. And that's our approach in terms of looking at comparative energy markets and where it is interesting to look at. For right now, there are certain phenomena that are particularly interesting to us, including the fact that a lot of grid systems, as the overall energy systems throughout the world are becoming much more electrified, grid systems are becoming much more under scrutiny. Even in developed markets such as the UK and the US, grid systems are suffering from limitations in terms of their age, in terms of the clogging up of the system from various large power producers, etc. We're looking at the world in a more distributed model as well. So we're not linking up to the big trunks in the grid system. We want to look at investments where the supply of energy is co-located to where demand centers are. More fundamentally, you get better efficiencies there. You obviate the need to go through the main trunks, so there's a much less of a losses that you would have in generating power in that way, and you're able to provide what a lot of users want, in particular corporate users want, which is dependable supply of clean energy. And that's very attractive to us, whether it's in terms of co-locating battery storage with solar on site or microgrid systems, as they're called nowadays, that employs a range of technologies altogether to provide energy as a service to their consumers. That's a particular area of interest. Where I see there being a lot of risk is when we're talking more fundamentally about systems such as green hydrogen, and hydrogen as a way of supplying transportation fuels or indeed power. In our minds, it's still unproven yet the economic basis on which you can do that, and by blindly going into projects that so-called produce green hydrogen and not understanding the full value chain to where the usage is and what that's going to be underpinned by, that could be a potential risk for investors.
Energy generation on site, I can see that being a big opportunity. Michael, you invest in Asia. Where are you seeing the most exciting opportunities?
I think the opportunity in Asia is a differentiated one in a sense compared to Europe and North America markets we've been also affiliated with for more than 15 years. In particular, as you don't run for replacement, you focus predominantly on building new power generation capacity. And I think it's a sheer scale which provides the opportunity when you look into our target markets. Take a sample, the Philippines will need $156 billion between now and 2030 to build new generation capacity. When you look at India, in a sense, you talk about these guys need in the next 20 years to build the entire European Union energy infrastructure just to keep scope, in a sense, with their current growth rates they have. So the volumes are way bigger than any individual company, asset manager, fund, utility, or government, in a sense, are able to cope with. I think what we see a big opportunity is, in a sense, and there is a large educational element clearly for investors in. And what we see is that you have a combination of home buyers, which is clearly something very natural for many investors, in a sense, to solve climate change in front of their own doorstep, within their own country, their own region. What we feel, however, is that the heavy lifting now has to shift over to Asia, in a sense, based on a few key fundamentals, that you have more than half of global population living there. You have Asia as the largest consumer globally. You have Asia, in a sense, now producing more carbon dioxide than Europe and North America combined. And when you take all these fundamentals into account, we had someone recently, in a sense, which had an interesting statement, which was around the fact to continue to invest in renewables in Europe, a little bit like shifting the deck chairs on the Titanic. It might look pretty, but it won't change the overall outcome. And where clearly everything helps, so don't get me wrong, investing in Europe, North America, whatever, absolutely matters. And it's a very, very important statement. What we see clearly is that we need to shift, and that's what we try also to get as measures across in COP27, is to focus, in a sense, the funding and clean tech investment way more towards the east and away from the west, in a sense, as that's where the heavy lifting is going forward. And if we want to get to a net zero in the next 20 years, there is no way around, in a sense, to address the point where it's most pressing at this stage, and that's in Asia, in particular in the fast-growing economies there.
Absolutely. I mean, the scale of the issue in Asia is completely different, isn't it? We really need to get working there. And Jonathan, where are you seeing the most exciting opportunities?
Just to make the point, most of our investments are in commercially proven assets and projects which have been around for a very long time, and therefore technologies that you can apply to generate stable, reliable, long-term returns. But the question is where we're seeing the most exciting things. And the things that excite me the most is where you see something which will change the game. And we've seen that before in the energy efficiency sector. So as an example, 10 years ago, only 2%, it's extraordinary, but only 2% of the world's lights were efficient or LED. Now it's over 60% indoors. So it's like you get these transformational things. You're not talking about science projects, but you're talking about sort of a displacement of one technology for another, and then a different outcome afterwards. And I think, so if I ask sort of where some of those things are happening, I find that exciting. Then one area I go into is the heating and cooling market, particularly cooling. The next 2 to 3 decades globally is going to see more rise in demand for cooling than China and India consuming energy in total today. And just to give an example, coming back to the point we made slightly earlier, most people think of clean energy as electricity, whereas 80% of the world's energy is other things, heating, cooling, transport, and so on. So I think that market is set for transformation. We made an investment recently, a very small investment, in a company that transforms the way that data centers can cool themselves. It's one of the biggest energy users in the world. Very excited about that investment. And the potential it has to change everything about the design, the energy footprint, even real estate footprint of data centers. Another example, motors. About half the world's electricity goes through motors. We don't see them sitting behind walls or in cars or in buildings. But it's possible to make those motors more efficient, variable speed drives, and so on. We've invested in a company recently, again, very small investment, but huge potential. Which makes an energy efficient motor that doesn't rely on rare earths. And I think that kind of mineral security and frankly availability and price of the stuff that goes in to make renewable energy and energy efficient technology is going to be the big challenge of the next 5 to 10 years. So coming up with solutions that not only make energy more efficient, but do so in such a way they don't rely on rare earth minerals, I think is going to be critical. So we're super excited about that. And then the last point I'll mention in a short answer is electrification of transport. The old adage is that what they call well to wheel, that is, if you extract oil from a well and monitor how much actually moves the wheels in your car, it's about 15 to 30% efficiency. It's extraordinarily low. Whereas what they call wind to wheel, that is the amount of electricity that comes out of a wind farm, for example, or renewable energy and goes to move the wheel in your car, is about 75%. So from an energy efficiency standpoint alone, it's super interesting. Obviously, huge impacts on local air pollution, air quality standards as well, which is even just as important, I should say. So electrification of transport, we've been investing in electric vehicle charging infrastructure in the UK, and we're expanding that internationally. So I think that's talk about exciting. I mean, our job as infrastructure investors is to be sufficiently boring as to deliver, reliable returns. But I think we can, from time to time, try and pick what we think is going to change the game. And those are 3 examples.
Absolutely, and they really are going to change the game. Very, very interesting, very exciting, actually. Yeah. Transformational.